Today we're going to be talking about pre-session observation, becoming aware of where the market's located and how the market is moving. We can do this by identifying market structure, and that's exactly what we're going to do on the lower timeframes. I've just released my 1-minute trade entry course that goes over exactly how I take these entries on a daily basis, covering each individual setup along with how to execute within each setup, aiming for precision, maximizing our rewards. A long anticipated course, and I'm happy that's finally released for everyone to watch. Today I'm going to be showing you how I use that exact entry system, going over 2 trades taken in 2 different sessions, using that 1-minute system where we can accurately position ourselves in the market, focusing on the biggest rewards. Now let's bring focus to our trading session. We'll be going over this trading session right here, and I'll be talking about how I managed to catch a short entry based on the session location. When I'm trying to understand the bias for my session, whether I should be going long or I should be going short in my session, I use my pre-session process. This allows me to consistently come to the markets each day and make accurate, repeatable decisions based on market structure and where the market's located. So here we can see for this session, we had price prior to the session opening coming from a high location here where we saw a rejection of prices. Now it's in this location where we had a previous range in the market. We can zoom out here and we can identify a previous range that led to initiation. So based on our RIMC process, this becomes an area to observe for a future mitigation where we can start to play price in the bearish direction. Moving into the session, I can see price before the session moving into this location and moving sideways. I can start anticipating that the market's going to move in a direction. That direction is going to be likely initiation structure moving in one direction. Now, as we can see here, price is ranging and then moving bearish. So it's at this location where I start to understand for my session, I want to be looking for lower prices. And in order to attack lower prices, essentially what I want to be doing is looking for a range, looking for price to initiate in a bearish direction, for price to pull back into that 50% region and looking for that continuation. So if I have a bias in the market, this is generally how I'm going to look to play price delivery and market structure as it presents itself, looking to play price in the best locations to yield the biggest results. So this is our process when we go down to lower timeframes, and this is what we're trying to identify when we have our session bias. The reason we're doing this is because we've managed to identify the momentum after a sideways market. And what we're doing here is we're building a narrative to follow. We can see that over time, price has been sideways, and then we've seen market move in one direction. Now we believe that we found the intention, and that's the direction we're looking to trade price in that intention direction. So when we see price start to pull back, that gives us our optimal opportunity to look for those sell opportunities where we can play price in that bearish direction. And what we are given here is a narrative, and we're also able to identify those locations where we can be a part of that understanding, looking to be in the correct direction. Now, our trades are always going to come on the back of pullbacks because this gives us the best possible entry location. And when price is pulling back, that's when we should be prepared to take our entry into that bearish direction, aiming for the previous low every single time because we know this is the target. Just this simple movement can yield us big returns, and we can repeatedly use this process at the start of our session. So here we have a zoomed out view, and we can see how price structure was presented to us before our session started. We can clearly see that over time, price is moving sideways, showing us that sideways delivery. And that sideways delivery, that type of structure we're seeing, is happening at a point of mitigation. We know this to be a previous range in the market where we can start to look for that mitigation to move in the opposite direction. So if price has moved into this location with a bullish narrative, then we should be expecting price to move away with that bearish narrative. And that is a mitigation to play price in the opposite direction. So we can see here that price is on multiple occasions coming into this location and mitigating and moving in the opposite direction. This lack of extension for higher prices is showing us that there is no intentions to move higher. We can also see in the opposite end of the move, we also see that price has a lack of extension to move lower. So over time, we can clearly see that a range is being created. And based on our process, we know that ranges lead to initiations. So when we see a range presented on our charts, we can anticipate that next phase to be that phase of initiation. That's where we're going to see those fast moving candles, price moving in one direction. And this is where we can start to take TPs because prices can cover the distance of our TPs very quickly. And that's how you're able to see me catch these quick TPs when price is moving fast in one direction. It's because I'm able to position myself at the right time in the right locations, following the correct direction of the markets. So clearly price is ranging. Now what we have here is essentially highs that will likely become targets and lows that will also likely become targets. What we're seeing happening here is that price is finding value and then price wants to move and trade that value into one direction. This stacking of orders is evidence that the people who control the market, the biggest participants, are preparing for that next big move, and we should be anticipating to ride that move along with them. Now, we've just gone through the high time frame narrative, and we can see that over time, we are anticipating price to move lower, and that is because of the higher time frame structure and the higher time frame narrative. So when we enter the 1 minute, what we want to do is find the direction of the market, and what we should be doing is discovering the market structure. So first, we want to identify the ranges in the market. So here we can just establish our range creation. We have our first range creation, and then we see price moving in one direction over time. We can just highlight that towards the downside, and we can see we have this type of structure we can identify in the market here as range and initiation. And this is the type of structure that we want to identify because, as I said before, when we know that price is ranging, we're identifying the big participants in the market. And then what we can anticipate next is that there's going to be a phase of initiation. And when price does initiate out the range, this gives us the direction, this gives us our bias, and we can start to play trades in that intention direction. And we can see that intention has taken out previous lows in the market. So previous we had stacked lows in this location. We can see price has moved to take out these previous lows and continued in that bearish direction. This is great evidence to see that, hey, price is likely going to head lower because price is not pulling back. And we can see that there's low closes over time, and those low closes are likely fueled by an intention in the market, and that intention is likely to take those swing highs and swing lows. So if we zoom out of the market here, we can identify where we saw that swing low to be created, the low of the range. And if we zoom out here, we can easily see that there is a low here that has been created. There's a low here that has been created. And it's this location that price is likely to target. We're just going to zoom out a little bit more, and we can start to understand that what we're likely going to see is price move back into the middle of this bullish A to B, and this can be narrative for lower prices. So now we've just identified that range initiation and we have an understanding of bias. We should be trying to identify our trades. Now, some sessions will present us in great locations straight away, and other sessions we may have to be a bit more patient over our trading hours for price to present itself in a better location. What we can see here as we enter the session is that price is remaining low. If this is relatively high, and we've discovered this as a high in the market, and our current delivery is creating lows, and when we have a low created in the market, we can understand that this is high prices and this is low prices. Now, ideally, we do not want to be selling from low prices. We want to be selling from high prices because overall, this is going to give us better odds over a series of trades. But when we do see intention in our session, we should want to play it because it's likely that intention is going to continue. So the first thing I have in mind is to find that structure, that A to B, that's going to allow me to discover the locations. And based on the structure, based on the market location, this will lead me to make decisions on what to do next. What I would like to do if I see price moving in a trending delivery is wait for price to move into that 50% location and then look for sell continuations to the downside. That's going to be my first observation, and that's what you're going to see me do here. Play that continuation shown in the markets. While playing price forward, we can see that that low is extending. We are starting to pull back. And if you notice here, price is ranging and price is initiating. And this can be the identification of opportunity, because when price pulls back into this location, we can start to identify opportunity in the markets. So let's just extend our A to B to the downside, and we can see that we have a range, we have initiation to the downside. And what I want to do is just show you how price is delivering before we identify the entry. Let's just take this off the chart so we can have a nice clear observation. Now that we have our established low in the markets, we can see price pulling back, and we can see prices pulling back into that previous range created. How do we know that's a range? Well, we have these facts that are shown to us, and we can see that just in this move down, we have a point of control where we can see there's a large amount of volume in this location. And it's here that we can apply our interest, because this is a fact of the market. And what we can see here is a point of mitigation. And we know that points of mitigations, what we want to see is price move into that point of mitigation and then away in the opposite direction. And this is my exact process to find the high probability trades of my session to yield the biggest results. We can see here that price is starting to slow down in its structure. What we're not seeing is price extending, and we're seeing price start to slow down. And this is happening at a previous range. This is a good sign to start understanding that there's a lack of intention to move higher. And what we could see is price roll over and continue in that bearish intention that we've started to identify in the markets. We continue forward, price reacts higher, and what we see is price immediately start to move into lower prices. So notice how this is a really fast move. This was actually off the back of a news announcement, but we can see here that price is moving into this point of mitigation. We're just going to highlight this into this point of mitigation from this A to B that was created, and then this is giving us opportunities to look for lower prices. I want to show you the trade that I placed, which was exactly at this price with my stop above the previous high. And what I was looking for was price to move in that continuation direction, for price to extend into lower prices, playing the continuation of that bearish trend that we was able to identify. Now, if you notice that higher time frame bias gave me an understanding of what to look for in my session, and then that market structure that was presented to me in my session window, I was able to play with good understanding in a repeatable way. There's a few extras here that we can apply to make this a high probable execution, but I will save that for people who want to watch the full course where I go over the full details. But a lovely mitigation trade, continuation to lower prices, and this is the exact type of delivery that I want to be presented in my session, showing me that precision is number one. So that was the first trade opportunity. This for me actually ended up in break even. As you know, I look for high reward trades in the market. That's what I spend my time and invest my time into. And we can see price came really close to my TP here, but price pulled back, took me out for break even, essentially ending that trade with a commission loss. Break even trade. Unfortunately, not much to do about that delivery, but definitely understood nonetheless, and great to see price continue into that bearish direction. So for me, I felt like I'm in this moment playing the right direction in price, and what I'm doing here is extending my A to B, understanding that price has had a strong rejection of low prices, and we're pulling back. And where we're pulling back into, or into that 50% location, we know that we can start to identify. So at this point, understanding that price, yes, we did continue. Typically, you know, that if that is a TP, the session's done for me. I'm not really going to seek to be a part of anything more in price. I'm going to walk away with those profits and apply myself in my next session. But based on that break even, I was happy to then observe how price delivers and play my opportunities. So while I'm understanding that price is moving in a direction, I can see here that there is a lack of direction now. Price did move past the previous low and we moved straight back into the middle of the range. And what we can see here is that price is stuck between two ranges. So at the moment, for me, there's a lack of direction, and the only intention I've seen drive into the market is that bearish intention for lower prices. And we know that bearish intention follows that higher time frame narrative. So what we're looking to do here is to still see price pull back and continue in that bearish direction. The great thing about having repeatable processes is that when we map our A to B structure in price, What we're given on a lower time frame is observation locations. When we start to see that price starts to create ranges at certain locations in the market, these become our observations for the future. So when price returns to these locations in the future, we can start to map out what we might do at that location, and that could be to sell based on that bearish intention. When we see that price runs into previous lows and we have a lack of a extension below the low and we start to pull back, we see that there's not one observation point that we're given, there's multiple observation points that we're given. And it's not just one range. Most of the time it's going to be two ranges that we can observe that is likely going to hold the mitigation for the future where we can see price reverse. So yes, that 50% location is one of the first observations when it comes to a continuation in price. And the next location would be that premium location where we know those higher probable trades to come. And that's really where I want to seek price delivery next. Identify that it's this location that might see a rejection in price and then attempt to get into that continuation for lower prices. Remember that our direction is bearish, our bias is bearish. So when we're seeing this delivery, as much as we're seeing rejections from previous lows, we want to use these as opportunity to pull back for lower prices. Hopping back into this price delivery, we can see that price is reacting at 50%. This is very common. Likely price is going to build cause around here as we start to move sideways. That next location is important to me. And what I want to do is become a great identifier as price moves higher. We can see here that we've got stacked highs. We've got several ranges here. We've got a range here where price was sideways. We've got here where price was sideways. We know this to be the one at the edge where our intention came from. And now if we do see price move higher, we go from being in a trending market into a sideways market. You notice that price pulling back up into premium is actually giving us more of a sideways delivery. And it's at these highs that higher probability is shown to us in that sideways market. So then as price is delivering into these locations, remember, I'm already becoming an observer, I'm already becoming understood, and it's at these locations that I want to make my trading decisions. So we can see here, as price is pushing higher, we get nice high close candles. Notice that one candle close high, two candles close high, three candles close high, and our fourth candle has a rejection, and then we start to move a bit sideways. Over time, we get candles move higher and candles move higher. So price is really moving in a direction here. And when we look left to understand where price came from, we can see that there was a previous range that was given to us in the markets here. And that's what created that higher price. So should the trader be long there? Not me. Personally, I'm biased. I'm only looking for those short trades. As price starts to move higher, we enter our next process, our next phase of observation, and that's price moving into a new range created here. As price is moving into this fresh range, and what happens next? We see price starts to reject into that bearish direction. Now, let's just have a look at how price delivers here. Notice that we're moving quite fast. Price is closing low, and it looks like it's aiming for something. Typically, these mitigation points are going to aim for previous lows in the market, and we can start to understand that intention is what creates that direction. So now we can see price move lower. We can understand the location it came from. Looking left, we have identified that range. So it's in this location that I would want to prepare myself for looking for those short entries on that 1 minute chart. Remember, this is a 1 minute chart, and it's the exact same entry as before, where we're looking to place our entry inside of the range. We're looking to have our stop above the range, and then we're looking to play price in that bearish direction. So we can see here quite quickly, price is moving in that direction. With a small 3.5 pips, we're able to yield in quite a few moves. This is only a 30 pip move on EU. Quite quickly, we're able to hit high RRs in the market. And as price continues here, we can see then price is going to take out that previous low that we've just had. Notice that we take out that range low, and we can see price move into plus 10% profit. Now, this is where I look to take profit around 10%. And on this day, this is the exact trades that I was in. Using my 1 minute trade entry, I was able to capitalize a 10% reward for that session with 1 commission break even, 2 trades total for the session, maximizing my results. Notice that we're not taking trades that look like this with a 1-to-1 or 1-to-2 take profit. We're not judging randomly where price might reverse. What we're doing is we're using precision with repeatable processes to maximize our results in a repeatable way in a fixed session window. So here we can see the end of the session, 10 o'clock, and before my session has ended, I've been able to take profit from the markets. So I've just zoomed out from the market here, and what we can see is that clear range delivery that led to price moving in a direction past that previous low. Notice that we're able to use that higher time frame narrative for price moving lower in our session, and then we're able to place our positions in these higher probable locations. How can we do that? It's because we are prepared, we understand our trade setups, and that's exactly what I go over in my free PDF, where you can understand exactly how I enter these 1-minute entries. So zoom back out onto a 5-minute chart, and we can see where our session was located and how that understanding saw price continue to move lower, where we can see a continuation in that bearish direction with a massive R potential. Now, luckily, we don't need to claw every single pip from the market. We just need to have a consistent approach and a fixed approach where we can yield these big positions and then move into our next session with great awareness. Being able to find the correct direction and price, being able to have a repeatable process to enter that understanding gives us the opportunity to take these big rewards. These are trades that I was involved with. We had multiple people in these trades trading along with me using my 1-minute process. Now we can see here that just with a simple higher time frame bias from a point of higher time frame mitigation, a repeatable process can be used time and time again, because there's another day here that is presented to me. And on this day, I do the exact same thing where I identify a point of mitigation. I identify a range creation here. That range initiates and I can see that clear direction for lower prices. Then we start to see price continue in that bearish direction. Now look at this picture, and what can we see? We can identify repeatable processes. If I go from a high to my low, here's a range in and around 50% where we can look for price to mitigate and continue in that bearish direction. And to achieve these results is as easy as following the process, because it's in these market structures that we want to focus on those sell low conditions where we can look for those higher probable trades to move into lower prices following the momentum shown in the markets. So if you notice here, price is moving sideways. We initiate out the range, price pulls back into the range, I place my position, and then price continues in that bearish direction. Let's think about how the session set up. First, we had our location that gave us that bearish bias. We observed that range coming into our session, so that pre-session observation. We saw price then extend into lower prices. We then observed price range over time and continue in that bearish direction. So it's these points in the market that we can identify as potential future executions to be a part of those winning trades time and time again. So the execution we can see here is placed inside of the range here with the stop above the previous high and a TP in that bearish direction, always aiming for high RR trades. If you notice that price shows that reaction into lower prices, we have overall from top to bottom, a 50 pip move here. And I've been able to capture just some of it for a 5R return. And this is allowing me to pass accounts with ease within my session. And this is what I use every single day. This is what me and the members are using, trading our fixed session window timeframes that could be London or New York, using our repeatable processes, range initiation, mitigation, continuation strategy, always applying ourselves on the right side of the markets.